It's time to do business again. It's Business Incorporated, 55 minutes of updates from the world of business. And here's what we have prepared for you. The China-Africa Forum is still on. It's the second day today. Our correspondent, Ladi Williams, sends details of conversations over there. And Somalia has decided to lift the ban on Taiwan passports. A crackdown on businesses in Harare, Zimbabwe. That's what the government is doing. They're fighting non-compliance. You're welcome to the program. I'm Ini John Mekwa. We start business from the global space. Crude futures jumped more than $5 per barrel today after Israel launched airstrikes against Iran without U.S. support, drawing concerns over the supply outlook from the oil-rich Middle East region. Well, global benchmark for Brent we see with August delivery rose 7.7%, $74 we see 5 cents, 0.05%, $74.25. WTI is also up 7.76%, at $73.32. And the major driver of this is that Israel's launch on Iran, which they say is targeted military operation against Iran's nuclear and ballistic missile program. Israel Prime Minister shared this in an address. The International Atomic Energy Agency says no increase in radiation levels have been observed at the site following the attack this morning, Friday, while the Isfahan nuclear site was not impacted. U.S. Secretary of State Marco Rubio has made clear that Israel had taken unilateral action against Iran without U.S. support. And Rubio warns Iran against targeting U.S. interests because that, they say, may bring a retaliation. Data from the Nigerian Upstream Petroleum Regulatory Commission shows that for the month of May, lowest and peak combined crude oil and condensate production in May were 1.61 million barrels per day and 1.81 million barrels per day, respectively. The daily average production in May was 1.657 million barrels, comprising of both crude oil, which had 1.45, and condensate, which was 204,000. The average crude oil production was 97% of OPEC quota, which is 1.5%, which was 1.5 million barrels. According to data from the Nigerian Upstream Petroleum Regulatory Commission, crude output dropped 1.48 million barrels in April to 1.45 in May. We still await the numbers from OPEC. That's expected in a couple of days. Away from oil, gold prices rose to a near 2-month high on Friday, driven by that safe haven demand as Israel strikes on Iran escalated tensions in the Middle East. So we look at the numbers right now. We see a lot of green. Spot gold is up 1.30% to 3,428.28. That's about 2-month high. We've seen higher than this in recent times. U.S. gold also up 1.4% at $3,449.60. Spot silver is on the flip side, lost 0.1%, $36.33, and platinum is down 0.8%, $1,285.21, and palladium remains unchanged. So it does seem, with the threat now on major commodities, that's gold mostly, and not silver, and the other metals seem to be a haven. Gold is used as a haven investment during times of geopolitical and economic uncertainty. It also tends to thrive in a low interest rate environment, and demand for physical gold actually weakened across major Asian hubs this week as soaring prices deterred buyers, with rates in India surging past the psychological key level of 100,000 rupee mark. Meanwhile, silver held steady, platinum slid, and palladium also down at this time. ProShare, one of Nigeria's research and information services company in the financial sector, observes that banks' digital incomes as a proportion of their gross earnings have steadily risen, and this was part of the Tier 1 Banks report for the class of 2025. The chairman of ProShare, Olufemi Awoyemi, says that while the numbers look good, more adoption of technology is one missing gap for the banks. Amidst the Central Bank of Nigeria directed recapitalization for banks, ProShare is sharing their assessments of Tier 1 banks in the country for the 4th year. Their findings shows that banks have so far collectively raised over 13 trillion naira in fresh equity capital.
More Nigerian banks will optimize their balance sheet by venturing into markets beyond Nigeria as they expand their customer bases and diversify their market risk. Tier 1 banks must be noted for their economic contributions as much as their balance sheet. Late last year and early this year, the research team at ProShare sat down and put together a review, GDP, and under the economy with which banks operate. We were happy to conclude that we could break down the Nigerian economy into 14 economies. The 14 sub-economies will determine how the GDP flow will be.
Some of the points shared in the opening speech are elaborated by a panel made up of bankers and economists. The conversation begins with understanding how the huge numbers on the bank's books can be used to realize improved economic activities.
Our banks are very good in strategy, and they invest in it anyway. So I don't, therefore, have any issue with banks making profits. But then that must be balanced with how we connect what they do with the rest of the economy, especially the real sector. And that is where I think they should pay more attention. Capital is good, yes, they become bigger, and they have more muscle to finance transactions. But let them focus more on where the problems are.
And the future is hinged on technology.
What we will see in the next 10 years in the banking sector, digitalization will separate the whole core activity. But my concern is whether central bank, as we know it of today, is going to be, at speed with what is going on in the market.
Banks may take 4 weeks to disburse on that same particular loan, trying to study your behavior, look at all the C's of credit. But if technology can be improved on and can look at your pattern, spending pattern, look at your credibility, get details about you, and pull that down, give a scoring, and they begin to improve on it. So that is helping them to even go into credit faster than even the commercial bank.
From the perspective of ProShare and conversations here, the Tier 1 banks are getting bigger, braver, and dominant, but they need to connect with the real economy for impact. As Nigeria continues the celebration of sustained democracy, economists are highlighting some concerns on economic progress. One of them, the Chief Executive Officer of Center for the Promotion of Private Enterprise, Dr. Muda Yusuf, notes that while macroeconomic indices show stability and growth, micro-indexes show otherwise.
So when we talk about micro, we are looking at how well the major actors are performing sectorally. And what cuts across all of them is the issue of productivity and competitiveness. If you look at it from that side, we still have a lot of issues. These things impact on, the cost of production. It impacts on the capacity of businesses to also create jobs, to retain jobs, and all of that. And the key factors influencing productivity are essentially what we call structural factors. Essentially, infrastructure, power, and more importantly, issues of logistics. We still have a lot of challenges around those areas in terms of productivity. So if we talk to the average business person, they are still grappling with the issue of the cost of production, cost of logistics, cost of power. Those issues are still there. So we still have major issues with respect to productivity. Then, from the perspective of the man on the street, what matters as far as the economy is concerned is the welfare. And the most important aspect of welfare issue is the cost of living. So generally, there's still a strong feeling out there, and rightly so, that the cost of living is still very high. Even though some of these numbers are showing that inflation is coming down and all of that, but the cost of living is still very high. So the struggle or the challenge that we have now is to get a connection, between the macro accomplishments or achievements and the welfare of the people. Because at the end of the day, people matter.
Let's head to China now with Laddie Williams, and it says that technology is revolutionizing how investors approach opportunities in Africa, providing real-time insights and reducing risks. At the China-Africa CEO Forum 2025 in Shenzhen, industry leaders are highlighting how data-driven tools are shaping investment strategies. And Laddie spoke to Mr. Xiao Hao, who is an executive vice president of the Africa Institute, Hunan University.
I can't think all of information, but I can make sure the useful information because that policy may be from the government. So if you want to abide the law, you need to know the government policy, that information. But do business, that's so where some private information that I can't offer because
yes, you can't do private information, definitely. Yeah. So when it comes to policy, when it comes to public policy, yeah, in the country, the prospective country, you can provide data for all of the policy that's being implemented in that country.
Oh yeah, we will collect for that information, but I think now we are step by step. Because in China, we need to know, because like the GDP, population, this is the basic information. And also we need to know what will be happened if you want to invest like the wholesale, hardware or the transport sector. We need to know what kind of situation, and maybe he need to know this one from some report or from some other ways to know. But sometimes we can't get the information is very useful. And I will, because we are a researcher for African, and so I will offer our research report and also other research report from some officials, government research center, that make sure this information is correct. And then we also, if we want to invest Nigeria, also we want to the newest one information. And like some president, he said, oh, now we need to use the AI or use some digital, something like that. He thinks this area is better. So we can use this system. We can get the newest one, and to let us know. Oh, if our company he want to invest African, he know hey, this area is better, and then he will find how to invest and the policy and the risk and also some tax policy or other ways. Also, in our AI system, we also can plan. If you want to go travel in this country, we can also very quickly to plan where we'll go and buy which ticket. Oh, I think this make our position, our decision is very easy. And for Nigeria, we in cooperation with the Choi International, we developed this system. Yeah, I know your Choice International, I think is a very good company, and he told me, and we can do more better, to do more things for Nigeria. So we are joined together to do this one.
All right, there you have it there, Mr. Hao Shao. They're using technology to get all of that data about any country, in most countries in Africa that you're trying to invest in. Thank you so much.
We're still with Laddie now. He met up with one of our own, the Group Managing Director and Chief Executive Officer of the Nigerian Exchange Group, Mr. Temi Popola.
Conversations are still ongoing right now, and I have the pleasure of speaking directly now with Mr. Temi Popola. He's a Group CEO of the NGX Group there. Joining me right here in Changsha, China. I'm sure you've had a lot of Chinese. I'm pretty sure.
Indeed.
Because I'm a sucker for Chinese. I've had so much.
Shishi.
So, definitely a lot of conversations, had, so far. And definitely the capital market was brought up as expected, this time. Talk to me about where Nigeria's capital market is now in attracting, investment from the giant is China.
Sure. Thank you very much. I think in reality, what you see is for all of the China, Africa, China, Nigeria discussions that go on, in our view, one big missing piece that really could help to catalyze things quite well is the financial flows. So when you look across several other jurisdictions, the ability for financial capital to move across both borders, does a few things. It signifies some level of confidence for the strategic investors that tend to follow. It also gives opportunity for those corporates to be able to follow capital ultimately, because one way or the other, you would typically need to fund or to finance your activity. So one of the first things we're trying to do is just really to find ways to open up those corridors. Spend some time in Hong Kong, going to spend some time with the Shanghai Exchange, spend some time here, really to find ways to replicate what we've been able to do with a few other regions and geographies, so that at some point, once there's the ability for capital to flow across both, it has a potentially transformative effect. The second thing is that Chinese corporates, the idea that you can actually raise capital locally. So this starts to help us to de-risk some of the challenges that people would face. People would say, for example, local currency versus foreign currency. How do you handle that mismatch? The ability now for Chinese corporates to raise bonds, to raise commercial paper, to raise equity even through standard exchanges, we thought is a very strong theme to try to pass across, and it's resonating quite well. Finally, for Chinese corporates, as you can imagine, the barriers to entry, everything from culture to language to fears people may have, no better way sometimes to de-risk all of that through exchanges directly on the exchange, right? So at least you know that the company you're investing in on there, a lot of that risk has been taken out for you, and I think this has been very well received also by many of the corporates here.
It's day 2 of the event, and I know Ladi will keep us up to date, on some of the other conversations going on there. Well, from the group MD of Nigeria Stock Exchange, let's head to the stock exchange at this time and see what markets are doing. Will Ibong has the numbers, Will?
I don't know if it is the vibes coming from China that is, working on our NGX, because right now
our NGX was on fire before they started.
Well, I just have to attribute it to that. Looking at them very vibrant there, you see the CEO so positive and optimistic about getting, deals from China, possibly companies to partner with Nigerian corporates here, and we'll see more inflows in terms of money, and then that's more commercial
and
papers
more
that
listings.
You mentioned. Yeah, more listings if we get these companies running
to come on board.
Yeah, to come on board. So
all right,
let's just see what's driving stocks. For major stock markets in Africa, we're mostly negative at intraday, except for Nigeria. We said that was an outlier, trading higher at about 0.67% as of the time I checked, and crossing 115,000 points. And that's a fresh new high. For the very first time, the NGX has broken that psychological level, and we hope to get more analysis and details from that from our analysts. So let's see what South Africa is doing at intraday. Nearly 1% down, 0.97% to be precise. Elsewhere, Egypt is closed Thursday, but was lower at 1.29%. If you can have that on the screen. But meanwhile, Nairobi Securities Exchange has been on a roll. It closed Thursday's trading session in very green territory. The ESI surged 2.4%. That's for Thursday's session. But let's dive now to what's happening on the NGX on the floor of the exchange and see what's driving stocks. Yinka Adetuberu, head of corporate finance and research, BAS Capital, is joining us this afternoon. Good afternoon, Yinka. It's good to have you on the show.
Good afternoon. Nice to be here.
Yinka, the markets resumed from the Democracy Day holiday on an upbeat mode. We're seeing it, in the 115,000 levels, another all-time high. Is this a reaction to oil prices surging over 7% today? I did mention attributing it to the Africa CEO in China, but I know it's not that, because we see Israel attacking Iran and we saw oil prices surging over 7% today. Is this what is happening to our markets right now?
Indeed, the market is on a roll, very upbeat mood. We have seen the market closing positive the last 2 days, and year-to-date performance at around 11%. Definitely, the current mood in the market is the market reacting to the current news in the oil market, as the investors are trying to revalue their assumptions on the market. So definitely the market is on a roll, and we expect even the oil and gas index of the market to be prime beneficiary of the current oil price that is rallying.
Okay, we're talking about stocks that are benefiting, especially the oil and gas sector. We look at outside and bring it in. We see Exxon, we see companies like Exxon outside rallying 3% because of the news about Israel's attack on Iran. And also we see, bringing it home, we see MRS, O&O rising higher. Are we going to see this sustained gain, or is this just going to be over after maybe everything cools down?
Thank you very much. Well, if it had been a very efficient market, I would have seen the whole lot of the oil and gas players listed on the NGS posting intraday strong greens. Yes, the current rally in the oil price is what is likely driving some of the investors' revaluation of these oil and gas prices. And of course, like I said, I expect the oil and gas index of the NGS to close positively, and some of the takers on the exchange to also benefit from that rallying, as investors generally shift the positive mood across the bows.
Okay, so are we going to see other stocks pick up from this and rally as well? Other sectors, maybe say banking, or is this going to be an oil and gas thing, maybe say for the rest of the week?
The Nigerian equities market has seen some key players being reviewed upward. We have seen Dank Cement, Boa Cement, Better Glass. We have seen Fitin, Beja benefiting from the upbeat mood the last few days, the last few trading days. And of course, like I said, not just the O&G index, the players in that sector that will likely benefit primarily from the oil rally, but some players, some tickers will also benefit from the positive investors' mood. So we'll likely see a mix of tickers posting strong greens at the end of the trading day.
Okay, so this 115,000 level that we've crossed today, is this going to be sustained? Do you see it being sustained throughout this month or this quarter? Or because someone did mention that maybe we would probably hit 150 by the end of the year. Do you see us sustaining 115,000 level even for today?
Thank you very much. Previously, it had only been the 100,000 points that had always been the psychological level for the Nigerian Stock Exchange. The market has benefited from the many reforms instituted by the NGS group itself, the influx of FPIs into the market, even though net we've also seen some months in which FPIs have taken a flight. But all in all, we are going to see a sustenance for some little bit, looking at the oil prices, looking at system liquidity, looking at good performance that has been posted by some of these companies, and then looking at the fact that investors are trying to reevaluate the current monetary policy and then the fiscal policy, and try to see how it's playing out and affecting the market. So for some time, we are going to see a sustenance above the current 115 point, and I'm expecting the market to close on a positive note today and have some little bit of sustenance. Yes, we are still going to have some pullback at some point, but the sustenance might, the upbeat mood would be sustained for some period of time.
Okay, so how are activities in the market, investors, what are investors buying, selling off, especially now that SEC has announced the T+2 starting later this year? Has this, triggered more activity in the market?
Thank you very much. Well, the last 2 days, we have seen investors going long on Dangote cement stock, going long on Boa cement, going long on some banking stocks that have declared good dividend and made good economic profit. We have seen investors picking up Beta Glass. We have seen investors picking up Berger. We have seen investors picking up Fitzin. So all in all, investors are looking across the bows and picking tickers that they've seen good economic performance and are extrapolating going forward. With the SEC T+2 new rule, well, it's a very good thing for the market. It's going to align the market to international best practice. It's going to boost investors' confidence. It's going to improve system liquidity, and most of all, is going to reduce counterparty risk. So at the end of the day, we would likely see more investors' participation on that backdrop.
Thank you so much, Yinka Adetuberu, Head of Corporate Finance and Research, Bass Capital, for your perspective on Business Incorporated. We look forward to having you more.
Thank you very much.
So let's look to other markets now. Middle East, most major exchanges were closed Thursday, except in the UAE, where bourses, regional markets, bonds fell after Israel military strike on Iran. Dubai was down 1.88%. We see Abu Dhabi also down 1.45%. Dubai's main share index was down in early trade 5.1%, its biggest intraday fall since May 2022, while Abu Dhabi's main index fell 3.5 at the open before recovering some ground. That's why we see it at the 1.5 or 1.4 levels. Now, still within the region, Saudi and Qatari indexes were closed Thursday. As always, we'll see how, but it traded lower, 1.49 and 0.89% each. Now, let's look at markets in the U.S. Let's see how they reacted to Israel's attack on Iran. Very, very red for that market. We see them trading lower, 0.98 for the Dow Jones futures, and we see S&P futures also down 0.94%, and NASDAQ futures down 1.13%. This is so much for that index, but we're hoping to see a recovery, possibly news that, something, good is going to come out of this. But we've seen the markets performing very low for today, but we're hoping that tomorrow, we're hoping that Monday we'll see a recovery for more markets. Well, let's see Maria Bird, our correspondent, giving us highlights for yesterday's performance.
The U.S. stock market closed higher on Thursday as the U.S. president has called for the chairman of the Federal Reserve to have a jumbo rate cut, as there appears to be some easing in inflation in the U.S. economy. As he's also calling for and putting pressure on trading partners, as there are major tariff threats in place. But the U.S. economy continues to seem to be moving in the positive direction, as the U.S. stock market was higher. Closing on the day was the Dow Jones at 0.2% up, and the S&P 500 had its highest close day since February, closing at 0.4% up, and the heavy tech Nasdaq closed at 0.2%, as companies like Oracle surged on Thursday. It is clear that the U.S. economy is showing some positive signs, and there's much hope for the U.S. stock market in the coming days and weeks ahead.
Definitely, Maria. Thank you. Stocks were on track for gains for the week. After today's sell-off, we hope that they end in the green. But on the economic front, investors will be waiting for the preliminary June reading of the University of Michigan's Consumer Sentiment Report, which is going to be out later today. Now let's look to Asia now. Markets fell on Friday as Israel conducted a military strike on Iran, targeting its nuclear program, where Iran has vowed to retaliate. Japan's benchmark Nikkei 225 Fed gains, but with closing lower 0.89%. We'll see South Korea's Kospi dropping 0.86%. 0.7%, and with the Hang Seng in China also dropping 0.59%, all reacting to Israel's attack on Iran. Now let's look at other markets in Shanghai. Mainland China, it ended the day 0.75% lower, and the Nifty 50 in India also lost about 0.68%. Markets are reacting negatively to Israel's attack on Iran. We're hoping that there is going to be a recovery next week for markets, and give investors a bit of hope. Hopefully, we don't have Nigeria. Nigeria is in the green, but maybe Nigeria would begin to start reacting maybe on Monday to the aftermath of the event.
I think we react more to, we've seen what is happening to oil prices.
Yes.
So our purse, the national purse, will react to that.
And probably pump prices.
And pump prices will react to that. All right, Will, thank you so much. Let's take a break. When we come back, we're still doing market, but that will be from Europe and other issues cropping up from there. Last Walter is standing by. Join us again, please. Welcome back. It's still Business Incorporated, and we head over to Europe now to look at the markets. Lars Holter standing by. Hi, Lars. Good afternoon. We saw red in the market, a lot of negative reaction to Israel's attack. I wonder what's happening in Europe.
Yes, Ini, of course, we're looking at the same situation here. We're adding to the red that you had on your wall just moments ago, because obviously markets here, it's not a German, it's not a European problem. I mean, obviously the entire world is worried about this escalation there that we're seeing between Israel and Iran. And as for the DAX, it's about 1% down now. The other European indices all are down between 0.5% and 1% as well. But I do want to add one more thing that we're also looking here, and that is actually quite positive, because we got some really, really good economic numbers out yesterday, or not numbers, forecasts, I should say. And mind you, just 2 weeks ago, I had to report to you that the economic experts for Germany were thinking that we had another year of no growth ahead. And now we have the reports out of 3 independent economic institutes that are actually forecasting GDP growth for this year of 0.3%, and then next year 1.5%. They're looking at some of the latest numbers. They're looking at that government initiative that we've often discussed before, that 500 billion euro investment package that the German government was getting ready to support markets here and the economy in particular. So a lot of good news actually here as well, but they are actually not being seen as much, it seems, in Frankfurt, because we saw the market now in the red for, I think it's a 5th day in a row, and we haven't seen that in a long time.
Yeah, well, I guess the good news or lack of good news is also happening around the auto market. So we've seen that for German automakers, they lost lost some market share in the Chinese made cars to Chinese made cars. And it seems there's another threat even at home now.
Yes, definitely. We're seeing more and more happening here in the Chinese auto market and how it affects Germany. And the German automakers, of course, had a problem over the last couple of years when the Chinese automakers, BYD and such, got stronger and they took over their home market, which was coincidentally, of course, for European and German brands, their most important market abroad. So now we're seeing them go a step further. Particularly, it is BYD, the #1 brand. They have just signed a deal with a company called Finn. That is a relatively young company that does short-term leases on cars. So they're having a fleet and they provide them to customers like long-term rentals for a monthly fee. And that new company, Finn, they have just signed a deal with BYD to take 5,000 of their cars, including the Dolphin model, which is their #1 small car model, and they're offering them here to German customers. The idea here, of course, for BYD is to just get these cars out on the streets, to have them driven and to have them noticed, because brand recognition is very low at this point, and so is the willingness of Germans to go for a Chinese car at this point.
Yeah, so, but does this sound like a good strategy for BYD?
Well, Ini, it's definitely a good way to get these cars on the road here. Looking at the latest numbers, it's clear that BYD needs a major boost here during the first 4 months of the year. Only 2,800 BYDs were registered within Germany. That would give you an annual 8,000 or so cars that would be registered this year. And while that is 4 times as many as last year, it's a pittance, of course, when seen against the vast German car market. Even worse, only just over 300 BYD were actually bought and registered by private customers, so regular drivers. So there seems to be just a bit more interest, at least from corporate clients, but the numbers clearly show that average drivers are really either not aware of the brand at all or that they're not interested. All that, of course, can change when they see more BYD models on the road, and this deal with Finn is definitely a good way for them to get there, especially since the traditional sales infrastructure that the established car makers have here also wouldn't work for BYD. They have about 24 dealerships right now. Volkswagen has 800. Mercedes has 600 or so. So BYD is having a few ideas how to break into the German market, but they are not a real threat, fortunately, to companies here.
All right, well, we'll see. Perhaps that prospect and perspective will actually come to be. Thank you so much, Lars, and have a great weekend.
You too, Ini. Thank you very much.
All right, talking about electric vehicles, AI, technology. We always talk about coding. Now they say there's a no coding. The world is changing, has many faces, I guess. We are speaking now to a no-code developer. He's also a product engineer. Jonathan Oranu joins us virtually from Port Harcourt in Rivers State. Hi, Jonathan. Welcome to the program.
Yeah, hi. I'm glad to be here.
Great. So what's this no coding? I mean, we're all pushing the children, all through coding. It's the way of the future. And now you are a no-coder developer. What's that?
Okay, so yeah, it's actually called no-code development, and it's an alternate means of building softwares instead of coding, as people know. So it's more of being able to build your software, maybe through telling the AI what you want to do and guiding it instead of actively having to write out every line of code.
So is this supposed to be an easier way compared to the coding?
It's not exactly easy because it's still technical, but it is a lower barrier to entry. So I would not say it's easy because it doesn't necessarily mean that that anyone can just pick up a computer and produce something amazing with it, but it's a lower barrier to entry. And with the right training, yeah, it is going to be easier. I would say it's similar to maybe writing, right? We can all speak English, but it doesn't mean that I can be a novelist like the next person. So yeah, it's easier to learn. It's easier barrier to entry. It's easier to create a product with it, but it doesn't mean that there is no learning curve to it.
So what's the advantage? Since it's almost the same. You have to do the training, and it's not everybody that can actually adopt it easily like that. So why should I look the way of no coding just when I'm getting used to coding?
Oh yeah, that's an interesting question, I would say. Well, it's not exactly that not everyone can do it. It's more of that you would need to learn it. I would say in comparison to actual development, it will take shorter time. So there is shorter learning curve in comparison to development. And then talking about the advantage, this is typically more cost-friendly to develop a product with, meaning that unlike the normal route of creating a startup where you have to have an idea, have millions of naira, or actually seek out investments from angel investors or venture capitalists. This time, since it is cheaper, you can actually create your own product as you like without having to incur a lot of cost. And this also means, and it's also faster to create products this way because you don't have to spend months writing every line of details as it happens with regular software development. This time around, you are able to actually create an app within days or hours. I've actually worked on an app within a weekend. So the major advantages, I'll say, are cost-friendly and the time friendliness of it.
So I don't know, but in my mind, what comes is some of the consequences of this, just like you have an app where you can actually create music, but you see the same way you have access to that app and you can create, from the lyrics to the beating online, somebody else can do it. So how is it yours when it's not coming from your brain?
It is coming from your brain. Even with traditional software development, your idea, people can have it. There is no company that I can think of right now that is doing something that no one else is doing. If it's social media companies, the logistic companies, or the fintech companies, your idea, it doesn't know other people can produce it. So ideas actually do not mean anything in the world of development. So it's the same thing with no-code development, right? You have an idea, you direct your AI agent or your computer on how you wish to build it. You mention the features that you want it to do. It's not always correct the first time. So this is where you have to be a bit technical. You have to handhold it because even the AI we know is not perfect today. So you have to handhold it a bit. But like I said, ideas actually are a dime a dozen. Everyone has ideas. They are close to 50 fintech companies in Nigeria today, and more are coming out every other year. So the ideas actually doesn't change anything. It's actually being able to create a product from start to finish, being able to validate it out, bring it to the market, and see that people want to use your product and solving a problem. That is what matters.
Maybe you should paint the picture for us. Give us an example of, a kind of business that I can do with this no coding, and I can start from, from beginning to the end and achieve it at a low cost, as you have said.
Oh yes, that's interesting. So actually, I have in last week, and this is just one example that I'm going to give you. Last week, I was stuck at the airport for a couple of hours, and within those few hours, I was able to design or create a full web app for a client, and this was in 6 hours. And you would agree with me that being at the airport is not exactly the most conducive working environment. And yet I was able to create from scratch within 6 hours a full working web app where we had where the clients would be able to collect users' details and be able to make business informed information using the users' details. So 2 years back or a year back, that would take a week, 2 weeks to develop, but I was able to get that done within the time that I was waiting to catch a flight. So that's interesting. Also, I have worked with several companies, and I'm not sure if I am permitted to say, but I've worked with.
If you don't mention the name of the companies, Jonathan, as long as you don't mention the name of the companies.
Oh, no. Yeah, exactly. So I have worked with companies even across Europe. So this is not something that maybe some Nigerians are pushing. I've worked with companies across Europe that have developed a consultancy platform using AI and no code. And one of those companies raised over 3 million euros this year in their Series C funding. And it was actually kind of impressive what they have been able to do. They have big clients, and I'm talking big four consultancy companies as their clients. So really, there's no limit. With proper guidance, there's really no limit to what you can do using no code. You could do something as easy as an app for maybe a social media app. You could do an invoicing app, and you could do something even more technical using it. It's all about your level of usage or how advanced you are able to use it.
Yeah, and for small businesses, I mean, I think it all begins with training, but you encouraged us by saying it's not as expensive as coding.
It's not as expensive in the case that if you're going to hire a developer, let's assume you have a small business and you're going to hire a developer to maybe create a website to advertise your business, and maybe you want them to be able to take bookings. You want to be able to take bookings using your website. It will cost you a bit in the millions, and then it would also take a week or two to get that done. But with no code development, and like I said, there is a lower barrier to entry. You could get this done way cheaper, and within a weekend you could get this done. You could have your business website set up, ready to take bookings online, ready to you could have like an AI bot as your customer care, whereby if users want to find out information from your business, they could they could chat with an AI bot, and if they really need to talk with a representative from the user, from the business, then they will be directed to you. So it basically saves time, it saves you money, it saves you a lot of efforts, basically. It's not it's not like a magic pill where you just tell the computer that do this and it just prints everything for you, but it often needs some hand holding. But in comparison to actually hiring developers to do this from scratch, writing every line of code, this is 5 times faster and 5 times cheaper.
All right, thank you. I know we'd like to hear cheaper. Jonathan Oranu, no-code developer and product engineer. Thank you for sharing this with us.
All right, thank you.
Now let's go to Somalia, where after pressure from the United States, Somalia has lifted its ban on Taiwan passport holders. That happened this week. The Somalian government said in April it would not recognize Taiwan passport, citing its one China principle. The move drew strong criticism from the U.S., which launched a diplomatic campaign to pressure the government in Mogadishu to reverse course. And the Somali Guardian reports that Somalia responded to U.S. diplomatic efforts and decided to lift its ban on Taiwanese passports. In the city of Harare in Zimbabwe, there's been an initiation of a rigorous enforcement campaign to ensure all businesses operating within the central business district, industrial areas, and suburbs fully comply with the relevant municipal bylaws. And this blitz targets commercial and industrial properties with outstanding rates and without valid business licenses as part of efforts to improve regulatory compliance and revenue collection. As part of the enforcement measures, the city will disconnect water supplies to all businesses found to be in arrears on their rates and lacking proper licensing. Additionally, the city health departments will carry out inspections aimed at identifying and closing down premises operating without running water, which contravenes the Public Health Act and the Harare licensed premises bylaws. Businesses located in buildings with multiple tenants are being reminded that each tenant must ensure that their rates and licenses are up to date. Failure by any tenant to comply could result in the closure of the entire building, creating inconvenience for other occupants. Still in Zimbabwe, the government has signed a landmark agreement with 6 banks to offer mortgage facilities that will enable farmers acquire the title deeds, access better financing, and advance agricultural development, lands, agriculture, fisheries, water, and rural development. And speaking during a research symposium, the minister in charge of that was in Harare and says that the initiative is a milestone achievement aimed at unlocking the full economic potential of land owned by farmers. President Emerson Mnangagwa recently launched a national program to issue title deeds to beneficiaries of the land reform program, granting them legal ownership and full economic rights over the land. Let's go to Egypt now, where that country has reached a series of agreements to procure between 150 and 160 cargoes of liquefied natural gas through 2026. The move comes as Egypt seeks to address its increasing power demands amidst challenging economic conditions. The agreement, involving global energy companies and trading houses, are set to cost Egypt more than $8 billion at current prices. And still in Egypt, the African Development Bank Group has approved a financing package worth up to $184.1 million to support the development of the Obelisk solar photovoltaic project in Egypt's Quina Governorate. The power project is the largest solar power plant in Africa and comprises a 1 gigawatt solar plant along with a 200 megawatt-hour battery energy storage system. The total estimated investment in the project will be more than $590 million. The financing package includes $125.5 million from AFDB's ordinary resources, in addition to concessional funding of $20 million from the Sustainable Energy Fund for Africa and $18.6 million from the Canada African Development Bank Climate Fund. An additional $20 million is provided by Clean Technology Fund on the Climate Investment Funds, complemented by further investments from development finance institutions. The projects will encompass design, construction, operation, and maintenance of the facility. The Obelisk project will be fully operational in the third quarter of 2026 and is expected to produce 2.77 gigawatts of electricity annually in early May. And they said the Norwegian renewable energy firm is also commencing construction on the first phase of the project. All right, now, so let's see what's happening in the crypto space. I guess we just have time for the headlines. We're starting from Brazil. Some things are happening in adoption of crypto. Brazil is to allocate 5% of national reserves to Bitcoin. And they said the country is edging closer to make history as bill a proposal that would allow up to 5% of the country's $370 billion in international reserves to be held in Bitcoin. This should move the market, all things being equal. Gains momentum in the chamber. If passed, Brazil would become the first G20 nation to formally integrate Bitcoin into its sovereign reserve strategy, potentially reshaping the global conversation around crypto adoption. And the bill introduces the creation of a strategic sovereign Bitcoin reserve, a framework that's aimed at diversifying Brazil's reserve assets while reducing exposure to global economic uncertainties. It marks a shift towards embedding Bitcoin to national policy, reflecting growing confidence in crypto as a hedge against inflation and US dollar dominance. Well, unlike El Salvador's executive-led approach to Bitcoin adoption, Brazil's plan is being shaped through a legislative route involving both the central bank and the Ministry of Finance. And this institutional coordination signals a long-term vision and potentially exportable model that other countries might emulate. We'll see how that goes with Brazil. Lessons learned from El Salvador, I guess. And away from that also, we see that in Kenya, there's also a story on Kenya. Sorry, I think I made an error there. Yeah, Coinbase has launched the first ever American Express credit card with 4% Bitcoin cash back. So now in America, you can actually use an American Express credit card on Coinbase, a cryptocurrency transaction. Well, Coinbase is doubling down on crypto utility. The exchange just announced this first ever branded credit card in partnership with American Express, and they're offering up to 4% cash back in Bitcoin. But it's only available to paying subscribers. That's what they said. and the Coinbase, we call it Coinbase One Card, will roll out this fall, tied directly to Coinbase One, and the company's monthly subscription service. So if this catches your fancy, you may want to follow up on that. Still in the U.S., the Securities and Exchange Commission has formally withdrawn several proposed rules introduced during the Biden administration, including 2 major regulations targeting cryptocurrency custody and decentralized finance platforms. In a statement released yesterday, June 12, the agency announced that it is rescinding 14 proposed rules issued between March 2022 and November 2023 under the leadership of former SEC Chair Gary Gensler. Among the scrapped measures are controversial proposals that would have expanded the SEC's oversight of digital asset markets. The Commission does not intend to use final rules with respect to these proposals, and the agency is also signaling a change in the direction of the current administration. The SEC notes that any future regulatory action would involve fresh proposals. And one of the most consequential reversals is the withdrawal of amendment to Rule 3B to 16 under the Exchange Act, which seeks to broaden the definition of exchange to include DeFi systems. The rule would have been categorized platforms using non-firm trading, interest, and communication protocols to match buyers and sellers as securities exchanges. So it does seem like adoption and realignment in the crypto space is going on globally. I haven't heard much coming from Nigeria, but we did have that Kenya's one. You know, they were also looking the way of cryptocurrencies for their reserves. But we'll catch up, I guess. But that's it on the program today. Thank you so much for being a part of Business Incorporated. It's Friday. You have a restful weekend, and we'll meet again on Monday, God's grace. I'm Ini John Mekwa.